Oh my word. I apologize if I look like I'm glistening today. It's what is it, like 90, 94, 93 degrees out there, heat index over 100. Thank goodness I mowed yesterday for the first time in a couple of weeks. Yeah, I needed a baler. Hey, this is Les Sulgrove with Des Moines Market Values, Simply Des Moines market reports for Des Moines and Central Iowa. It is week 30. Oh my gosh, this year's going fast. And I think I got one of the best shows put together today that I've probably had in a long time. I mean, I always feel good about my shows after I record them, but I feel really good about this one before I record. So let's jump in and see what's going on in the Des Moines and Central Iowa real estate market. So the topic this week is the real estate cycle broken. You know, we've talked about the real estate cycle at the end of the year. I think I touched it on the first part of 2025. Maybe that was during the year-end report, probably. And we're going to talk about where I predicted we would be this year and kind of where we are. That's a hint. We're not where I thought we'd be. And kind of go over the reasons why. So this show is going to be good because it's going to give you an idea of why the market is kind of why it is, and why sellers feel like they do, and why buyers are feeling the way they do. So do me a favor, hit that subscribe button to the YouTube channel. We really want to get up over 1,000 subscribers. We're doing really well. We were up by 4, I think, this past week, and I'd like to really get that up and going. So here we are, the dashboard. As always, we start off with that. We are at 4,196 homes on the market. I'm going to hold off on celebrating this until we beat the 2019 number. At one point, we were at 4,200 there. And so it'll be kind of a big show for that week. But next week's show is end of July report, and maybe we'll have that big announcement as when we hit 4,200 plus listings. So the big thing you'll see here this week is that the number of homes for sale are continuing to increase a little bit. We've had more homes listed this week than we have the last couple of weeks. So if you look right over here, you can see that we were beating out last year's numbers. We're pretty much right on track with sale pendings and closed sales. Of course, we're getting near the end of the month here. It's the 27th. So next week, we'll see a pretty good jump there because of end of month closings. We're currently at 7,677 homes closed year to date as of today, with a goal of hitting it or beating 13,226. And we are ahead of that. So we'll probably talk more about that next week as well. Mortgage rates here this last week kind of floated around that 6.75%. They were up and down by maybe 2 or 3/10%, and or hundredths of a percent actually. No, whatever. It was pretty close there. 400 open houses this week are existing homes, and 848 are new homes. So 1,248, not a record high, but still a good number of open houses. I would assume that maybe the weather is maybe keeping a few of those open houses down, but I won't spill the beans on the price reductions because we're going to talk about that in the show this week. So, all right, let's jump in here. The show this week is a quick review of the real estate cycle. There are basically 4 phases to a real estate cycle. There's a period of expansion, there's a peak period, there's a slowdown, and then there's a recovery. And each of these 4 categories have their own little subcategories. And I think the big misconception is that we have to be in all 4 of those subcategories, see the 4 things in all 4 of those before we can see, for example, expansion. We should have rising home inventory levels, buyer demand should be on the rise, home prices should be rising, and time on market should be dropping. Well, that's just not the case. Occasionally we'll get, and this is where we're at right now, we'll have some in expansion, some in peak, maybe some in recovery, some in slowdown. And that's what we're going to talk about today, is why this market feels so wonky, because we're seeing different attributes within within the different subcategories here. So let's start off first and kind of do a quick review of what I reported back in the 2024 year-end report. And this again is the real estate cycle. The last perfect cycle, I guess I would call it, is our 10, the perfect cycle, or the most common cycle, is about a 10-year cycle. And we saw that from 2000 to 2010. And, we saw expansion in the year 2000, 2006, we peaked, 2008, we had a slowdown. It was also the mortgage meltdown. And then recovery happened in 2010. Nice and neat. Yeah, we had a kind of a, you know, serious part of the economy happening there in the late 2000s, but this was a fairly typical cycle. So fast forward to 2024, here we are. This was the cycle that we originally were in the process of seeing a very similar cycle. 2015 was the expansion period, 2019 was the peak, and had COVID not hit right in here, we most likely, because everything was pointing towards, maybe a little bit of a slowdown and a recovery, and we would have probably been on about a 10 or 11-year cycle again. But instead, what happened was we saw COVID come in, which just regenerated the expansion period. That was where that period of time was that we saw all those homes come on the market at higher prices and buyer frenzies and multiple offers and escalation clauses and above offer pricing. Man, what a crazy time that was. And it wasn't until about 2023 we finally started to see that market slow down. And I've tagged 2024 as kind of our recovery year. That was the year we really hit the brakes, and things just kind of said, okay, it's going to start to get better from here. And that's basically what I predicted at the end of 2024, that we would be in an expansion period in 2025. Well, guess what? The real estate market has its own mind, and had the path I had predicted. You can kind of see here, there again, over to the right, is that we would be in an expansion period, and at some point up here, we would go into a peak period of the marketplace here. So before we go too much farther, let me bring in those 4 attributes again and kind of show you where they are in using the 2000 to 2010 cycle. So again, the period of expansion, we saw that around the year 2000. Around 2006, we saw the market kind of peak. We had inventory leveling off, buyer demand was at the highest, maximum home prices, time on the market was shortest. Then we were in a slowdown period, some of that obviously with the mortgage meltdown. We saw several price reductions. That was also the time when we were seeing a lot of bank repos and short sales, and time on the market began to increase. And then finally, we kind of said we recovered at that 2010 period. And you can kind of put those same numbers here to 2015 as an expansion year. 2019 was on track to be kind of a peak year, but it turned into a transition year back to another expansion. And then 2023 was kind of the peak. 2022, 2023 was the peak, and then 2024 was our recovery. So slowdown and recovery kind of happened in this period. And honestly, I just really felt like at the end of last year, I thought, you know what, we're going to get back to this more normal 10-year cycle. And I really kind of predicted, that we would hit a peak here in 26, maybe 2027, maybe 2028, and then start to go down. It was supposed to be, 2, 3, 4 years of really solid, steady real estate market business. Well, we all know that, we really didn't see that. So 2026 was kind of, again, that's kind of where I predicted that to be. What really happened and what we're kind of seeing now is we're struggling to get out of recovery. So 2024 down there at the bottom, you can see that's kind of where I made this prediction. And I really thought that we would be kind of making this 2025 on a more of an uptick. We've had some upticks in the marketplace, but we're also seeing some downturns. And so if we kind of look at today's show, we're going to look and show you under these 4 different categories: expansion, peak, slowdown, and recovery, kind of where that real estate market is at. So 2026 is kind of what I'm thinking is going to be an expansion year. Sounds like everything is supposed to be coming back according to the NAR and all the other market indicators that 2026 is still going to be a good year. It's just not going to come until we get into 2026, as opposed to building up from 2025. And then, 2027, will that be our peak? I don't know. I mean, that's my magic wand, my my wizard hat apparently needs new batteries here. So let's kind of take a look at expansion here first. So across these top 4 attributes, so under expansion, um, the top one is rising home inventory levels. And, what would give me an idea that would be a different market, a different type of a market would be that, inventory is leveling off, or that we're inventory is slowing down, or that we're basically at our low point in inventory. I don't think we are at the high point of inventory. I think we're still going to be rising, and that's what we talked about a little bit in the beginning there when we were at 4,190 homes on the market. I think we're still going to get closer to 42, maybe even 4,300 homes on the market at some point this year, and it might be within the next 6 weeks to get to that 4,200, maybe even 4,300. So we'll watch that. So I give the this particular line item here, I give this expansion. So that's good. That's going to help keep the market poised for a strong finish in 2025 and a strong start to 2026. We got to have our inventory. That's one thing we just absolutely have to have. The second, here are the indicators. I'm sorry, I was jumping ahead. The indicators that tell me this is looking at homes for sale. And you can see that all year so far this year, we've been ahead of 2024. And here we are, we're at 4,196, almost 4,200 homes for sale. If we continue on this same path, we could literally, if we stay this same gap, we could be at or above 4,500 homes for sale. That is something I'm not sure we're going to do. I really feel like maybe going into the fall, we're going to see this kind of flatten off. We're seeing a lot of the fall activity appearing right now. So what we would typically see in October, November, December, starting to see in some other parts of the market here. So that would mean that if we're seeing it now, we're going to see this kind of tail off a little bit. So we might hit our peak here in the next 6 to 8 weeks, and that's why I predicted that. Looking back even farther on active inventory. So you go back to 2019, there's that year where we were at 4,262. We're not very far from that right now. But what I do want to point out is from 2021 through this year, we continually see the inventory levels grow. So, it couldn't get much worse in 2021 when we were down around, 1,700 homes for sale. At the lowest point, you can just see that every year we're seeing this elevated growth, and I'm looking forward to that. Let's see what I do there. Okay. So 4,196 is where we're at. It would be really nice to see us hit 4,500. I'm not sure we're going to do it, but we'll see here. So let's go now to talking about the next line down here, buyer demand, whether it's on the rise, at the highest. Buyer selection is an advantage or demand is at lowest. I would say right now, most of the time we're seeing that the buyer home selection is an advantage, but it's a slim advantage. The reason why I say that, let's go right into the months of inventory. So this is the graphic that tells us whether we're in a seller's market, a balanced market, or a buyer's market. And, normally in the last 2 or 3 years, we've been used to being in a real heavy seller's market, down around that 1.5 to 2 months of inventory for the spring, and then getting up around 3, maybe 3.25, 3.5, until we get towards around September right here. At least that's from last year. And what you're seeing right now is that, at 3.9 months of inventory this week for all the homes combined, this is new construction, resale, everything. We're currently sitting at 3.9 months of inventory, which is right on knocking on the door of being a balanced market. And, I think that the buyer demand is strong enough out there that the buyers are going to see this as an advantage. Even though we're still in a seller's market, the fact we're seeing more inventory, if rates were to come down just a little bit more, or fairly dramatic, down 0.5 point or so, or 0.75 point, I think that buyers are going to move this over here to this peak category. Not that we're at the peak of the market, but that would give one of the attributes towards peak. Where we have buyer demand increasing. Right now we have a good number of buyers out there, and they are watching. As far as existing homes go, that first one was 3.9 was all homes. Existing homes are sitting at 3.3 months inventory, still at the top tier of a seller's market. This is your typical single family home that has been owned before, so it's a resale property. We do typically see that go into a balanced market near the end of the year, just 2 or 3 times. So last year we saw it really only 1 week. The rest of the time, there's the little dashes from last week or last year. Um, we were pretty heavily into a seller's market all year, except for maybe 1 week. This year, we've started off the year in a seller's market, and I think that we're probably going to get back into a balanced market, this blue one, a balanced market. We're going to see that probably closer to September, October. So again, that kind of indicates that maybe we are favoring that slowdown period just a little bit. Now, I don't mean it's going to come down and go all the way down. It's just a slowing of the expansion is really what we're going to probably see there. So new construction, on the other hand, more than half of this year so far has been a buyer's market. We immediately in the spring market around March, second week or so of March, there we were with a balanced market. But for the most part, the last 4 weeks now, we've been back into a buyer's market. We've been over 6 months of inventory, which means we have more homes on the market than we have buyers, and that's totally the opposite of where we are with the existing homes. So 6.9 months of inventory. Builders would love to see that be more down in the balance. In fact, that's kind of where they live their best lives, is when it's in a balanced market, because they can kind of turn on and turn off inventory. I wouldn't be surprised to see maybe the listing of new construction maybe slow down just a little bit as we get toward the end of the year, just to try to increase that demand. That's one thing that they can do in the marketplace that we can't do in the resale property market or property categories. So last year they ended up well into a buyer's market all the way, basically from about September 1st on, it looks like here. So, all right, over to the next section here. This next line of guesses. It's a good way to put it, a guess. Are home prices rising? Are we at the maximum for home prices? Are we seeing price reductions, or are we seeing homes priced at probably at the lowest, which is the most affordable? You know exactly where I'm going with this one here. Price reductions are not only common, they're uncommonly high. We've had 3 weeks where we were over 500 price reductions in a week, and we never saw 500 price reductions in a week at all in 2024. So far, we've seen 3 weeks like that, and 1, 2, 3, 4, 5, 6, 7, 8 weeks above 400 price reductions. So we continue to see price reductions overall, and the majority of these are single-family resales and condo townhome resale properties, because the new construction pretty much doesn't come down in price. They may negotiate, to keep the price where it is, but maybe negotiate concessions and things like that to incentivize you to buy there. So the big thing in new construction this past year has been rate buy down as well. So if you're really looking and you want to get that low rate and you don't want to risk having to go through a refinance right away, maybe new construction is where you should be looking. It's going to cost a little more, but it's going to actually probably balance out, because the lower taxes for the first couple of years as the taxes kick in, and incentives like the lower mortgage rates and things like that, it might just be the perfect thing. So help our builders out there and get them going through this fall, because they're the one category that can really affect this market here. So, all right. Oh yeah, there was that 500 line right there. So the last one here is the time on the market. How long is it taking homes to sell? And right now we're seeing, I think we're at the longest. I was tempted to put it in time on market increasing, but it seems like, and you'll see why I say this, at least on some level here, it seems like that our days on market is kind of at the high point. I don't think we're going to see obviously we're going to go through the year, and as we get toward the end of the year, we're going to see days on market kind of pick up a little bit, and that's just normal. That's seasonal. But let's just go right to the slide here, and you'll see, this last, 3, 6, 7 or 8 weeks back here, we have, it's not going up anymore. It's kind of staying pretty steady, just like it did last year. Now, what we'll maybe see here is, as we get now into the month of August and we get the state fair going on, those last vacations going. Maybe homes are going to stay on just a little bit longer. That's kind of what we typically see in the month of August, which is represented here. But as long as it's not extremely different from where we were last year, we can probably see a rise and have it still considered at the longest point here, and not just because of for each week, this is the longest point. If we were to see us, days on market really start to go up, in these periods of time overall, then I would say that, our time on market is increasing. We really haven't seen that. We saw a little bit of that as we entered into the spring market, and I think that was just a lot of buyers waiting for rates to come down, which never really happened. So that's kind of why we were seeing that increase there. But you can see it was pretty steady going down. So existing homes, that other one was the all homes on the market, existing home days on market here. Again, fairly stable. A little bit of a length here just this last week over the previous year. But again, we're going through the month of August. For existing homes, I'm going to expect this to stay pretty much level like we saw last year. It'd be nice if it would stay right about that 10, 12 days on market and not go up anymore. That would help fuel a little bit of activity as we move into the fall market. New homes days on the market. We've seen new construction inventory start to drop a little bit, and you get that supply and demand thing going, where you don't have as many homes, and you got buyers looking, and they feel that sense of urgency or FOMO, that fear of missing out. So I think maybe that's why we're seeing new construction days on the market maybe come down just a little bit. But they've been predominantly through the summer here, or late spring and early summer. We've been seeing them on the market much longer there. So, all right. Well, with that, that is the show for this week. Hopefully, what I've told you helps kind of give you an idea why we're feeling the way we're feeling. It's all about a feeling, right? You can look at numbers, and obviously every segment of the market is different. You might be in Windsor Heights, or you might be in, in the Beaverdale area there, where maybe the market's a little bit stronger. Although I've heard even that market was a little bit slower this year. So, or you might be in a slower pace market. It seems like the northeast part of Des Moines has been just a little bit slower than normal than from previous years. So anyhow, I hope you will join me next week. We'll go through the July report, kind of get a good idea of the path on a monthly graphic as well. It takes some of those highs and lows out and can kind of help you figure out what are the trends on a longer term basis. So with that said, thank you again for joining me. This is Les Sulgrove, and please don't forget, subscribe to the channel. Let's get me up to 1,000 subscribers here. Guys, let's do it by Halloween. Can you tell somebody that you would benefit from this show? Please tell them about the show and ask them to subscribe. And we will see you all again next week. Thanks for joining me.